All right, so we're about 2 minutes after, we're about 7:48. I see a number of folks still joining, but in the interest of time, we got a very busy agenda, so let's get started. First, I want to just note who's going to be joining today. It is myself, Will Leahy. I'm from SIFMA. I'm one of the moderators, and with me is Jim Fertitta. I'm sorry, Jim, from Goldman Sachs, who is one of the leaders of the GFMA LEI working group. With us are going to be Julia Ferraris from ESMA, Alan Deaton, who from the FDIC, but is the chair of the LEI Regulatory Oversight Committee that's working on corporate actions and data history. Further, we're a special treat. We've got Stefan Wolf, the Chief Executive Officer of GLIFE, the Global Legal Entity Identifier Foundation. So, Julia, well, first, let me say something. If you want to ask a question as a participant, you have the ability to do so through the chat function. Send me a question. We'll try to get it answered. It's really the only way during the webinar you can pose a question and try to receive an answer from the panelists. I will note we are collecting all of these questions, and the ones that we don't get to during the course of the webinar, we're going to create an FAQ document and send it out to the participants. So very important for you to get your questions to me electronically. So without further ado, Julia, are you ready to talk a little bit about the MiFID implementation and what's going on in Europe?
Yeah, thank you. Good morning or afternoon, everybody, depending on where you are. My presentation today, yes, will focus on of course, on the MiFID II requirements and the status after the go live on the 3rd of January. But I would also like to expand a little bit on the upcoming rules that are also listed at the end of my presentation. Starting with the MiFID II requirement and the impact after the go live. We can start with the first slide in the presentation. So we've seen that the LEI issuance has increased dramatically right ahead of the MiFID II deadline. So in the last quarter of last year, this is quite positive and encouraging results. The total number of LEI issued globally since the start of the LEI system has increased dramatically. It has doubled in the last quarter of 2017 with a growth rate that is 69% in comparison with the previous quarter. So that was quite an encouraging number. I guess this is also due to the breadth of the LEI requirements under the MiFID II. Just to recall, I give you a bit of an overview of the requirements themselves as outlined in the next slide. So under MiFID II, you have two type of requirements. You have some requirements that apply directly to the entities that are subject to the obligation to report. And these are MiFID investment firms, trading venues, and approved reporting mechanisms. These entities have an obligation to obtain an LEI, even though they are not already have one. So this is the first obligation. But in addition to that, they also have the obligation to keep their LEI reference data up to date, and therefore renew their LEIs according to the LOU's terms and conditions. Slightly different requirements apply to entities that are not directly subject to the reporting requirements. These are entities that must be identified in the report. And the entity that has the obligation to identify them in the report are the reporting entities I was referring to before. With respect to the entities that are not directly subject to the requirements, there is still an obligation for those entities to be identified with an LEI, and this regardless of whether these entities already have an LEI. So even in case the entity is not in possession of an LEI and is based on jurisdiction outside Europe, the obligation is still to report them with an LEI. So in particularly, it was quite an extensive requirements for two types of entities under MiFID II. The EU investment firms and the trading venues were obliged to report the LEI of clients and issuers of financial instruments traded in Europe, regardless of where these entities are based or whether these entities are subject to LEI requirements in their own jurisdiction. So why was that launched? The LEI under MiFID II plays a key role, especially is essential for regulators to undertake their market surveillance activity, including detection of market abuse and market manipulation. And the accurate identification of issuers is critical for example, for the monitoring of managers' transactions and for suspicion transactions in order under the market abuse rules. Another type of entity that is crucial for authorities to undertake their supervisory duties is the clients of the investment firms, and that is why we also put particular emphasis on the obligation for investment firms to identify their clients. In the next two slides, you will have an overview of how the indirect requirements apply to these specific entities, to the clients of the investment firms and to the issuers. So the first slide outlines how the requirements apply to clients. You see that the obligation to report is on the EU investment firm, which is in the square in the middle of the diagram. They have the obligation to report to the competent authorities when they are executing clients' orders on EU trading venues. And this obligation applies both with respect to the EU clients and to the non-EU clients. And also, regardless of whether these clients are corporate or financial, so it covers a broad set of entities. The next slide gives you an overview of how the requirements apply to issuers. Again, we're talking about EU and non-EU, corporate and financials. And the obligation is triggered when the EU trading venue is trading instruments that are issued by these entities, and they are subject to the reporting requirement to the competent authority or ESMA. In particular, with respect to the LEI of the issuers, the reporting is not just to the regulators, but is also to the public. So ESMA then publicly disseminates the information that it receives under these reporting requirements. So this gives you an idea of the breadth of the LEI requirements under MiFID. That also explains the uptake in the LEI issuance that we have observed at the end of the quarter, as shown in my previous slides. But despite these encouraging rates at the end of the quarter, and also to support the smooth implementation of the requirements, especially to avoid bottlenecks in the LEI registration process, we have issued at the end of last year a statement to grant an exemption for a limited subset of entities and for a temporary period of 6 months. So this is not a general grace period that was granted, but we put around the exception a very strict guidance on what investment firms and trading venue would have to do in order to remain compliant. So we can move to the next slide, even the one after, that gives you an overview of the content of ESMA statement and the temporary period of 6 months. So the exception, as I said, applies only to a specific subset of entities. So trading venues are allowed to, on a temporary basis, report their own LEI codes instead of the LEI codes of non-EU issuers, provided that they are also reaching out to these non-EU issuers to obtain the LEI code at the same time. And that is the first subset of entities for which we are accepting for the LEI of the trading venue instead of the LEI of the issuer. The second set of entities is the clients. It's the exception to the no LEI, no trade rule under the MiFID II requirements. So basically, for cases where the investment firm has obtained a mandate from its client to get the LEI on its behalf, then we would allow for again a 6 month period to allow the trading to take place, even though the LEI has not yet been obtained. This under the condition that before providing the service of trading, the investment firm obtains all the necessary documentation from the client to apply for the LEI code on the client's behalf. These are the two type of entities. It has to be said that at the same time, both ESMA and CAs have expressed commitment to closely monitor the compliance with these conditions, and in particular to make sure that the exemption is not abused, and it is only used for the specific subset of entity identified in the ESMA statement. So the use of the trading venue on LEI is only allowed instead of the LEI of non-EU issuers, and the investment firm can provide the service to their clients only if they have obtained the necessary documentation to apply for the LEI on the client's behalf. So if we can move on to the next slide, which shows the clear conditions that I've outlined, and based on this condition, the competent authorities in Europe as well as ESMA have launched several review exercises to monitor the data that is submitted to them, and assess, for instance, the level of late reports that are submitted when the LEI of the client has been obtained after the execution of the trade. Another aspect we are monitoring is the use of the trading venue LEI, whether this trading venue LEI is only being used for non-EU issuer, or whether trading venue are also using it for EU issuer, which wouldn't be allowed under the rules. And so these results of all these fact-finding exercises will be presented soon among the competent authorities over the course of the next month. And it seems that competent authorities have taken very seriously the duty of the commitment to closely monitor the compliance with the statement. We can move on to the next slide. Yeah, see, this is still on the condition that I've explained in my presentation. So the next one. Okay. So this is with respect to what we are doing under MiFID II. At this stage, under MiFID II, the discussions seems to be gradually shifting from pure monitoring of the compliance with the statement to more activities of a more supervisory nature, and therefore it seems that there is no desire at this stage for for an extension of the 6 months relief. But at the same time, I must be cautious to say that any decision of on the next step, including the exact date and the modalities around the lifting of the exemption, will need to be assessed among all national competent authorities at the highest level of the ESMA board over the course of the next several weeks. So we advise you to keep an eye on our website for any official communication on this issue. Very important. MiFID II is one of the areas where we are very acting on LEI, but we must not forget that there are other regulations in Europe coming up soon. You can see also that Europe continues leading in the regulatory actions taken, also globally. The next slide gives you an overview, actually the next 2 slides, they give you an overview of the regulatory actions that are coming up soon. We can move to the next one. So you can see, well, we had the Emir Reporting requirements kicking in November last year, where there were some adjustment of the rule, especially with respect to the use of the LEI for the reporting parties and the obligation to renew the LEI. Next, we have the CSDR rules that already entered into force last year, but we expect the majority of CSD to be authorized by the end of this year. So therefore, you will have another wave of requests potentially at the end of this year, given that the requirements only kick in once the CSD is authorized. In the next slides, there are some more requirements. We can maybe move to the next one. Yeah, so market abuse rules, MiFID II rules, we touched upon that. Then we have the rules on SFTRs that also envisage the use of the LEI, and these are expected in the 3rd quarter of 2019. They will apply in a phased-in approach, so every 3 months, starting with financial counterparties, and then 3 months later CCPs and CSDs, and then 6 months later the non-financial counterparties will be subject to the requirement. And lastly, but not least, the Prospectus Regulations. So all the rules applying to issuers of securities offered to the public in the European Union. ESMA again expects to deliver the requirements to the Commission in the 3rd quarter of 2018, and the final application of the rule is expected in July next year. So that's all. Gives you a little bit of overview of what's coming up and our experience for this year with MiFID II. I would be happy to take any question.
Okay. Thank you very much, Giulia, as always. And we do have a bunch of questions coming in for you. I'm sure you can guess what many of them are related to. I think you addressed the temporary extension on the ESMA. So folks are obviously interested in that, and we'll continue to look for it. Another question that came in from the group was, you talked about the entities that are directly subject to the reporting requirements and obligated to obtain LEIs, and then the entities that are not directly subject to reporting. I mean, how do you think about, how does the industry and the regulators really enforce those entities from, obviously they'll get them, but how do you really enforce them to go and renew them annually as required? Is there any thoughts on that?
Well, on that, in terms of legal tools that we have at our disposal under MiFID II, there is not the only enforcement powers we have are over our reporting entities. So we cannot fine or issue any supervisory action on clients or issuers who did not renew their LEIs. We can. There is nothing in our rules that would discourage them or even forbid them from renewing their LEIs, and this is something that we encourage in all our communications. But yes, in terms of legal enforcement tools, this is where we stand with respect to MiFID II.
Understand. Thank you very much for that. I think we'll try to address some of the other questions as part of the GFMA working group. As Will mentioned in the beginning, we'll try to respond to some of the other questions. I think Will, in the interest of time, we'll move on.
Yeah, of course, and thank you again, Julia. So just as a programming note, so I hear some folks are having issues with the sound. Now the challenge is those that can hear me aren't having issues with the sound, so it's kind of a challenge to try and suss that out. But if you are, or if you have, send me a quick email and I'll try and sort it out. Thank you. Moving though to Alan from the FDIC, the chair of the LEI ROC working group. Alan, can I turn it over to you?
Yes, absolutely, and thanks, Will, for the introduction. For those who don't know me, I am an associate director at the FDIC, but I'm here in this context to talk to you about the work of the Regulatory Oversight Committee, and I am the chair of the ROC, as we call it, the Regulatory Oversight Committee, the ROC's Committee on Evaluation and Standards. So why don't we go ahead and to the next slide is the agenda slide, just to give you an overview of what we'll be talking about. So I wanted to talk generally about what the role of the CES is, the Committee on Evaluation and Standards, within the ROC context. And then I wanted to also talk to you about the various work streams under the CES and all of the work that's being undertaken within those work streams. So this is going to be more of a general around the world presentations and an update about what's been going on lately. So let's go ahead and jump into the meat of the agenda and go on to slide 3. So the CES, for those who may not be familiar with the ROC structure and the CES itself, the CES is an advisory body of the ROC. And as you can see from the language that I have on the slide from the ROC Charter, the work of the CES focuses primarily on data and data standards in the global LEI system. The CES is charged with evaluating the adequacy of existing standards in the GLICE and with developing a vision for the future in terms of revisions to standards and the introduction of new standards. The CES is not a policy-making body, but the work it does inform the formulation of policy by the ROC. We do a lot of boots-on-the-ground work within the work streams in order to recommend and inform policy-making decisions that the ROC considers. The CES does not, of course, perform its work in a vacuum. There are other stakeholders within the system, and in particular, the Global LEI Foundation, who you're going to hear from next, that we work with in the formulation of standards. And I think there's really good cooperation between the ROC and the CES and the Foundation on the development of standards, and ultimately the GLIFE has to implement standards for the LOUs and others in the system. We in the CES try to focus primarily on higher level standards that intersect with policy and try to leave as much as possible the operational standards that determine how the system functions and operates to the GLIFE, the foundation itself. We do, however, retain an oversight role over the system, so we still have a dotted line connecting us to the entire system itself. So as an extension of that thought, the CES also performs a more general evaluation function, which is highlighted in the first work stream that I wanted to discuss with you. So why don't we go ahead and go to slide 4. Slide 4 highlights the work of the work stream on data quality. This work stream was one of the first work streams established under the ROC and under the CES. We clearly believe that data quality is one of the most important elements in the global LEI system and should really be seen as a hallmark of the system. In that spirit, this work stream will likely have an ongoing function into the foreseeable future. There's a lot of really detailed work wrapped up into the work of the work stream, and I wanted to highlight just a few areas that may be of interest to you. The first thing I wanted to highlight was that the team has spent a considerable amount of time, especially in 2017 in particular, on the review of the accreditation process. And for those who may not be as familiar with that process, when we first set up the system with local operating units starting in 2013 or thereabouts, there was a system of sponsorship by ROC member agencies. And in order for these local operating units or LOUs to begin operations, they had to be sponsored and overseen by one of the ROC members. We call this in our parlance the interim system, and it was in place before the foundation was established. Once the foundation was established and operational, it began to develop, of course, a process and standards for the accreditation of LOUs that would eventually be managed by the foundation in a steady state system. The GLIFE, of course, has been, the foundation has been very busy in 2017 managing the accreditation process. And as that part of that process, the ROC has an opportunity to review the accreditation packages for each of the LOUs to raise questions and to perhaps suggest improvements, and with an opportunity to protest a particular accreditation in an extreme case if we believe that it's warranted. This groundwork is functionally undertaken by the work stream on data quality, and policy positions are recommended to the ROC plenary for transmission to the foundation. This evolution from an interim system with sponsorship by the ROC to a steady state accreditation framework managed completely by the foundation was completed in 2017, and our interim system ceases to exist. But we still expect the system to continue to evolve, and we see the ROC as still playing an important role in the oversight of the accreditation process. So we would expect the ROC and the CES in some way, shape, or form to continue monitoring the accreditation process in the future, but we would also likely expect it to evolve over time as the system, quote unquote, burns in, so to speak. And we really see that it's been a fruitful relationship and a fruitful partnership with the foundation, and look forward to continuing that relationship into the future. The second area I wanted to highlight is the data quality evaluation work of the work stream. The reference data in the system describe who is who, and that information is referred to as level 1 information. That would include things such as legal names, headquarters address, and identifying information about an entity. The relationship data describe who owns whom, and we refer to that information as level 2 information. That information, the relationship data, has started being collected in May of 2017. And in particular, we collect data on direct and ultimate consolidating parents of legal entities under accounting definitions. Many of the members of the CES and the ROC, of course, are very heavy users of the LEI reference data. And we believe because of that, we're fairly uniquely positioned to discover data quality issues that might otherwise go undetected. And given our close working relationship with the foundation, we're also in a good place to discuss and suggest potential fixes to the problems when they arise. And we do this in a couple of ways. One way is by raising individual challenges, using challenge facilities available at the LOUs and at the foundation. These facilities are also available to members of the public. And the second way is to raise questions that either might affect implementation of new standards or to raise questions about the implementation of existing standards. And last year we held very detailed discussions on these topics with the foundation. We had two very in-depth and fruitful data quality workshops with the foundation, where we identified observations of some data quality concerns, and that really led to some concrete actions that would be taken to address those concerns. One example was that the work of the workshop helped lead in part to the formulation of a data quality campaign that corrected some obvious misspellings of city names in the LEI reference data. And I think that future data quality campaigns would be expected to follow at a certain point to address things that we've observed in the system that could easily be addressed or corrected. And then finally, I wanted to mention that the work stream is also evaluating the collection of level 2 information on parents that don't have LEIs. So you may recall, as part of the implementation of the level 2 data collection, the ROC charged the LOUs with collecting parent names, addresses, and business registry information if that parent didn't have an LEI. This information is not yet public, and the ROC is currently evaluating the quality of that information to determine when those data are of a high enough quality to make it public. We will be having very in-depth discussions at our upcoming meetings throughout the rest of 2018 to discuss those details. Let's go ahead and move on to the next slide, which highlights the Corporate Actions Working Group. In late 2017, the ROC conducted a public consultation on incorporating corporate actions into the system. We received a number of really substantive comments on the consultation, including a response from the GFMA and its various members. On March of this year, we held a workshop with the respondents to the public consultation, which included a large number of participants from the GFMA to discuss the major points that we thought we had heard through the consultation. We received a lot of really valuable additional feedback during the workshop, including the feedback that we may need to actually rebrand the name of our work stream, because in fact we're not really interested in corporate actions per se, or at least not as they're commonly understood, I think, in the industry. But rather we are interested in capturing legal entity event information that impact the reference or relationship data in the system. So we had a really fruitful discussion around that, what that would mean, and what that would mean to the quality of the data in the system in the future. And I wanted to highlight 4 areas that we discussed. First, we discussed incorporating corporate action data feeds into the system. And this idea was first introduced as a way to get information about entities that had become inactive and wouldn't have the incentive, and in some cases maybe not even the ability, to report the fact that they are inactive to the various LOUs. One can imagine an entity goes out of existence, they are no longer employees, so who is left to report that they are inactive or for whatever reason. So we're interested in exploring data feeds to solve that particular problem. But in addition to that, we are also interested in exploring whether such data feeds could be useful in alerting the LOUs to other possible changes to the reference and relationship data maintained in the system for the LEIs under their management. This could be an extension of the first use case and might help to make the work that we know would be required to incorporate such data feeds into the system, make it more worth it, more bang for the buck, so to speak. There are a number of commercial and regulatory sources that we've been evaluating as part of market research, and we still have some follow-up to do from the workshop. We got some good feedback on additional sources to look at. And there are clearly some impediments that we need to overcome. There are obviously cost concerns. We want to keep costs in the system as low as possible. This changes, no matter what they are, typically can raise costs in the system, and we want to be very mindful of that. We understand that there are potential implementation difficulties with matching identifiers, since not all of the external data sources we're talking about already have LEIs, so that would be a complication. There are also coverage concerns because the sources individually don't cover all the entities that we care about, and don't always cover all of the data elements that we're interested in. So one of the ideas we hit upon was that we could, and we may likely have more conversations on, is that perhaps we could start with something small and learn by doing. For example, maybe focusing first on inactive entities or name changes, things that are of high priority and perhaps easier to implement, and then evolve into some of the more complicated questions and tackle those problems later. So that would be a way forward that we would like to discuss among ROC members and think about a little bit more. We also discussed incorporating effective dates into the system. And what we mean by that is the date on which changes become effective in the real world or in a legal sense, rather than when they're reported to the system, which could be many days, many months after the actual change took place. I think most everybody agreed that this information would be very useful, but there again are some impediments that we need to overcome, which again would include cost, both to implement and to validate the data on an ongoing basis. And also to get really crisp and clear definitions about what we mean by effective data itself, very precisely by data element. Here, I think we could also adopt a learn by doing approach by thinking about possibly a phased implementation or a phased adoption of mandatory requirements, something like that. We are considering whether we should consult further on the topic, or whether these are implementation details and whether they can be, our policy can be finalized and leave those details to the implementation of the collection of the data in the system. And we're still talking about that, and we're not quite sure exactly where we are there. But I think those are two options to consider for the ROC. The third area I wanted to highlight from our discussion was that we presented and discussed a general framework for implementation of these legal entity events into the system. And the general consensus was that we should prioritize those events that would be most useful to end users, and that we should adopt a practice of learning by doing, that would be very instructive here as well. And this is a topic, again, that we're also discussing, and we'll there's an option or a potential that we would perform more consultation on this in the future. But this is sort of like the case with the effective dates. Is it something that the ROC feels like we need to consult on, or is it really in the implementation details and we can foreclose on policy now and leave the implementation details to later? Again, we'll be discussing that at the ROC's upcoming meetings throughout 2018. And then finally, we discussed the cost-benefit analysis in the context of the proposed changes in the consultation document. And as all of you know, cost-benefit analysis can be notoriously tricky. Our conversation in the workshop headed toward a focus on use cases and clearly articulating what capabilities would be delivered to the system by adopting the proposed changes. And one of the ideas that we discussed was to possibly conduct a survey of sample users to identify processes that could be eliminated by implementing the proposed changes, to show a possibility of cost savings by eliminating duplicate work and that kind of thing. So that's a possibility that still is open to us. Let me wrap up this slide by noting that the ROC would like to finalize its policies on implementing corporate actions in 2018. We will need to balance the desire, of course, to be comprehensive with the need to be expeditious, which is always a challenge. So we'll be discussing the matter with the executive committee and the plenary in the next couple of months. Let's move on to slide 6 on funds relationships. So this is the third work stream, and it really is dealing with this concept of the funds relationships and expanding the information that's available in the system on funds relationships. We conducted a public consultation late last year, and the results of that consultation were discussed with the ROC at the plenary meeting early this year. In terms of the results of the consultation, I think generally there was support for replacing what's currently the fund family concept in the system with a more granular and more informative approach that distinguishes, as we proposed in the consultation, other categories such as fund management entity, master feeder, and umbrella funds. Although we did hear from the consultation that further clarification around definitions would be desired or required. There was some opposition to including more general categories such as other fund family relationships because of the limited value that naturally would provide to users. And in that same vein, collection of more granular and more informative relationship data was encouraged. There was also really no objection to collecting the information or continuing to collect the information on an optional basis, but we did hear some opposition to making data collection in the more granular making that mandatory. Some of the respondents suggested conducting further consultation on the areas where there was some disagreement or where there are still options under consideration. And I think that's something that we will continue to discuss among the ROC. But as a first step, we are going to hold a workshop with industry on May 3rd. I think that's already on the calendar. And we'd encourage your active participation in that workshop and look forward to the opportunity to clarify any questions or to have an exchange of views on this very complicated topic. Let's go ahead and move on in the interest of time to the next slide on sector information. This is the fourth work stream under the CES, and this work stream was formed in part as a result of a request from the CPMI IOSCO harmonization group to the ROC to consider whether there would be some benefit to industry to include sector information in the system. We've been studying this topic, and just to put it very simply, it's very complicated, and it also arouses very passionate debate among stakeholders as well. You can probably well imagine. We are not yet at a decision point on the future direction of this work, the work of the work stream. And what we've done so far has been exploratory in nature. We've consulted among ROC members and other public authorities outside of the ROC with some very specific questions. So we've asked them to identify user needs that they see from their perspective, to identify some of the existing data sources that they use to get this information, and also to provide some input on options for implementation if we do decide to include sector information in the system. And a number of options were suggested, and they range the gamut from something would be relatively difficult to do, such as adopting our own classification system. That would be very complex and difficult work to agree on, to something that would be much simpler, such as linking to external classifications systems that already exist. And you could imagine a range of options in between those two things. Based on the balance of the information collected from these respondents, the ROCs will consider in the coming months whether to continue the work by engaging in a public consultation. That would be the next step if we do decide to continue the work, or whether the work, there's sufficient disagreement about the way forward that we should suspend the work either temporarily or on a permanent basis in consultation with other working groups or other stakeholders for that information. So some decision points this year, definitely for this working group and for all of the working groups. And we look forward to being able to communicate to industry what the decisions are. Finally, I wanted to wrap up. I don't have a slide on this, but it is in the agenda on the topic slide, if you recall. There is a new work stream that we are forming on government entities and LEI eligibility. The work stream, the point of this work stream is that it will address questions about the registration of governments or sovereign entities within the global LEI system. We're currently drafting the mandate. That's why I don't have a slide on it. Maybe I should have just at least had a placeholder, because we're drafting the mandate now, and we're gathering membership or volunteers to be members of the working group. And in particular, for this particular work stream, we're going to consider whether the criteria for determining LEI eligibility for a broad range of government entities and some sub-entities is really clear enough. For example, public sector entities that have a legal personality under a domestic law would be pretty a straightforward case. But here we're really talking about the issue where we're talking about ministerial departments or agencies or other structures that may not have a legal personality, but do have some sort of autonomy or responsibilities that make them look like legal entities, such as being an issuer of accounts in public entities, or managing its own assets, or has some contracting authority of some sort. We're also going to consider how to define those relationships in the public sector context. Currently, as you know, the system has this relationship of direct and ultimate parent that's based on accounting relationships. But these relationships may not be really relevant in a public sector context. Yet the information can be really important to be able to define a family, so to speak, but also be able to define a direct and ultimate risk bearer, and being able to group LEIs that can be traced back to the same entity. So that's going to be work that we're going to be undertaking very quickly. So as you might surmise from all of what I've said, there's a lot of activity happening within the ROC and its various working groups. Generally, we're trying to close out as much of the work as we can so that they don't run overly long. It's a challenge, of course, when we have a large number of stakeholders that we want to make sure that we address those concerns, any concerns that they have. But we would like to close out work so that we can free up resources for other work, and we continue to make progress for improving the system for all the stakeholders. And let me just end by saying that we really appreciate the substantive feedback from the GFMA and its members and other stakeholders, and really look forward to continuing the good dialogue and partnership that we've had with the industry. So let me close there, and I'd be happy to entertain questions now or maybe at the end, either however you'd like.
So why don't we just on the tail end of your comments, a few questions have come in from the participants, and interestingly, a lot of it mirrors some of the discussions we had around operationalizing the corporate actions, kind of tucking into the corporate actions space. First, just a general question on the LEI ROC's vision on how there would be data feeds and from whom regarding, so not data feeds in to correct the LEI, but data feeds out regarding LEI activity. Is that something that's envisioned by the LEI ROC?
Well, that was something that we talked about. I will say that hasn't been, well, let me say two things about that. The data are freely available, and that's how the system was set up. So how that functionally works with respect to a feed, that's not necessarily a policy decision. It's probably more of an implementation decision. But that specific concept hasn't been discussed at the ROC level. But that is how we want the system essentially to function as one of those sources. We would see, though, in this particular context with respect to the data feeds, is that we'd like for the system to be able to understand when changes have happened in the market, and to be alerted to those changes. We do want to preserve this idea of self-registration, that the entity owns its data and that it comes back to the system to make changes to the data, so that there aren't necessarily automatic updates that happen, in the sense that we get an alert from a feed and it's automatically updated. But we want that alert to help to encourage updates by the system through this process of self-registration.
Okay, go ahead, Jeff.
I was going to say, I see a lot of questions have come in on regarding some of the level 2 information, but just knowing Stefan is going to touch some of those, we'll just ask people to be patient. I think Stefan coming up next will probably address a lot of those questions. But certainly a lot to look forward to in 2018. A lot of very detailed implementation will go into, obviously is being discussed and will need to continue to be discussed on the corporate action and fund relationships. So we'll keep our eyes out for more to come on those topics.
Excellent.
Yeah, and for the folks that sent in more detailed questions around the operation of the LEI ROC, we'll circle up with Alan and get those provided in the FAQ document. So thank you all. And thanks again, Alan, for joining.
Thanks for inviting me.
So if Mr. Stefan Wolf is on, Stefan, are you there?
Yeah, I'm here. Thank you, and welcome everybody, and thank you for having me, I think for the fourth time. And before I start, in the last 3 webinars, it was more that I announced things to happen. This time we can really report for the first time on a very successful implementation. I'm very happy also to take questions regarding some of the aspects. Level 2 was just mentioned, and others. So on my overview slide, on the next slide, you see what we're talking about today. I structured in the agenda slide, next piece. I structured it in 2 parts. One is the current update on where we are and what's happening right now. But we thought we should share with this audience also our ambitions for going further than where we are today. So we want to look into the strategic outlook and potential for growth within and outside the financial sector. So let's start with the current developments on page 4. You'll see while we were talking about MiFID MiFIR, and Julia gave us a good update on that, we just not had to grow the number of LEIs, which was a big, effort by the LOUs. I'm very grateful how well they managed. We also added more LOUs. That was the accreditation piece, but we also added more depth and more complexity. And level 2 is, I think, the top front of this. As you can see now, we have roughly 6 months, 7 months after beginning of the collection, almost 600,000 legal entities that have already reported on the status of their parent information. Most of this came in with Q4 reporting, and that is not a surprise. These were the newly onboarded LEIs coming with the MiFID MiFIR regulation, and they also had at the same time to report on their parent information. We expect the full population to be covered after 1 year of renewal cycle, and that will be some time, in the mid of this year. On the next page, you see a little bit of a breakdown. The rule for parent collection was to collect only those parents who consolidate the child fully in their book, so it's 50+ ownership. And that means that the vast majority of LEIs reported that they have no such parent. It could be that listed companies have a wider spread of shareholders. It could be joint ventures in other forms. So the majority of entities reported that they do not fall under the fully accounting consolidation policy. And that is what you see in the bar saying it to the right. What we see is that we have roughly parent information on around 7–10% with an LEI. So that means the child reports the LEI of its parent into the system. And we have another bunch of organizations, we call them P&I, the parents without an LEI. These are organizations that report about a parent that would fall under accounting consolidation, but does not have an LEI as of yet. So this is something that the ROC is looking into right now of what to do with this data. Could be that the data will be published, could also be that it will become mandatory for the parents to have an LEI. We'll wait and see what it brings. Good note here is the opt-out. That was a bit of a concern last year, that the opt-out rules that have been given by the ROC would be misused to hide relationships and to avoid reporting. From the numbers, we cannot confirm this. From the numbers, those volumes are pretty low, so we're very pleased with this. Only a very few entities opted out, so I think altogether, it looks pretty healthy. Just to give you the full amount of LEIs, I just looked up this morning. We have 1.16 million LEIs, of which roughly 17% are in North America, 60% in Europe, and 23% in the rest of the world. And the uptick in Europe is clearly linked to the MiFID MiFIR requirements. All right, so on the next page, if you please switch to the next page, we have actually introduced another relationship type, which we call the branch relationship type. So that means the head office is obliged to report on one international branch per country. These branches are usually not legal entities per se, but they have some kind of official record, whether they are registered in the business registry or other registries, so that can be validated. So you will find now LEIs in the level 1 file, in the business card information file, where it says entity type is branch, and you will find the relationship between head office and branch, between the LEI owner of the head office and the LEI owner of the branch. You will find that relationship covered in the level 2 system. And this is the first time that we introduce a second type of relationships. And as you can see, the system was constructed in a way that over time, the policymakers could add more relationship types. And for us, it would technically mean only that we add those relationship types into the files. There is a good chance that we're going to see a similar development with funds and the funds reporting piece. Not been decided yet, but it gives you an idea of how the system could evolve on a technical level. Pretty simple, pretty clear. A few status information needs to be read and interpreted, and that's it. On the next slide, I would like to, very proud actually of this. Swift and Clive worked together, and Swift did a tremendous job in mapping the big code to the LEI. And the reason for that was very simple. This is all about usability. You have now in most banks the payment side, which still sits on big codes and many others, and you have the trading side, which has the requirement for the LEI. Now that means for every firm in the world, they have to do the mapping. They either do this mapping manually themselves, or they acquire this from a service provider. The trouble is that the mapping itself becomes a quality issue. If mappings are wrong, decisions might be flawed, and that should be avoided. So we reached out to Swift to overcome this issue, and we're very happy that Swift engaged with us in this. So what we're doing is a certification program where the big codes that are available are matched against LEIs in order to find all the positive matches, right? And we have a validation tool. We have all kinds of software developed in order to verify that and to help Swift with that. And so we can certify the program. In the end, what it comes out is a big 2LEI file, as you can see on our website, freely available. And the objective is to avoid false positives, so false links. There might be other big 2LEI links that we have not captured yet, but it's just a matter of time. But the file is ready for you for download and for incorporating, and we understand that many in the industry welcome this very much. On the next page, I'd like to tell you a little bit about what we're planning to do. The MiFID requirement and next year the Prospectus Regulation require an issue of an instrument traded in Europe to have an LEI, and the issue itself, that the instrument itself, to have an ISIN. And that means it is very natural that the ANA organization and Clive think about how we can utilize that and make it more easy for users to absorb. So we're thinking right now about creating a similar program where the issuer in the ANA workspace, so to say, is mapped to the LEI, and that means you would create a stable LEI to ISIN mapping. It's not done yet. We're in the process of finding out how easy it is and what the obstacles are, but we're positive that we will get to some results within this year. On the next page, you see another development which is relevant. Last year already, the Expel organization and Clive worked on a standard LEI Expel taxonomy to embed the LEI in Expel documents, not just for the legal entity itself, but also for expressing relationships among legal entities in Expel. These Expel documents are already in use with the SEC, for instance, in EDGAR Online filings. There, the LEI is not included yet, but in Europe, I think it's about 2020, the standard will be set up that reporting can use Expel in the IFRS taxonomy, which has been adopted there, and there the LEI would become part of financial reporting under Expel as well, which we see as a very positive development where all these different worlds come together. Now I would like to talk a little bit about, on the next page, on some of the major IT projects that might be of interest for you. On the next page, we talk about the golden copy file. So let me explain this for a moment. Now you have two types of files on our website. You have the concatenated file, which is nothing else but fetching all files from all LEUs and putting them into one file. And we publish this daily. And we now have a golden copy file. The idea for a golden copy file was driven mainly by two considerations. Number one, in order to parse the concatenated file, you have to know a little bit about all the states and transitions and the rules embedded in there. And that makes it a little bit more complicated for IT folks to import the data. So with the golden copy file, we eliminated that, and the golden copy has just one record per LEI, independent of which state it is in a transfer or whatever. And the other reason is that the concatenated file, we had experience in the past days where LEI simply disappeared from the file. So there was a technical malfunction, whatever. This cannot happen with the golden copy file because the golden copy file is generated out of a database that captures the data from the very beginning and covers all data ever met. And that will be used also to provide audit trails of data change logs. And in the future, I don't want to, promise whether it's going to be this year, but we have it on our plan, is also to provide some kind of an alerting mechanism, a feed of all changes in the LEI file. For users, I think the biggest plus of the golden copy files is that we issue them 3 times a day for each time zone of the major hubs, as well as Delta files. So we have 4 different types of Delta files: the 8-hour files, 1 day, 1 week, 1 month files, and that makes it much more easy to absorb the data because the amount of LEIs have already reached a limit where most people cannot cope with Excel and importing it there anymore. So it really is really helpful for users. On the next slide, I'd like to show you a little bit the technical architecture, what we did. On the left side, you see that the LOUs upload the files to Glyph, and then you go up, we create a concatenated file 1.0 and now 2.1, and those will be published on our website. And in the interim, we have now built a database version in the middle. Let's not discuss the nuance between the two databases. From a usage point of view, it's one database, and that is used for generate the golden copy files and the Delta files. So these files do not come anymore from the concatenated file; they really come from the database and comprise all the information that we have at that point in time. And on the next slide, you see the next logical step in the evolution, which means that we will allow access to the database via API and of course via our website. And this will make it for the first time possible to search the database through an API. And we believe that the API availability will make it even more attractive for users to do ad hoc queries, on-demand requests, and these kind of things. So quite an ambitious program that we have for this year in order to make the LEI as user-friendly as possible. I think that sums it all up, with all the mapping programs and so on and so forth, to make the LEI a central point in your databases and in your data management, and make it as easy as possible, as convenient as possible to use it. And with this, I would like to move on with the strategic outlook. We're very excited about a study that McKinsey conducted. They run a series of market interviews, quite significant ones, really, and came up with if the industry would adopt the LEI fully across the board, right? There would be, for the annual savings alone in 3 use cases, they estimate $650 million per year in savings. This is the beauty of a standard like the LEI. It's a network effect, of course. Once everybody uses it, everybody has the benefit, and that adds up quite significantly. And please feel free to download the study if you haven't done it yet. It's really worth reading. On the next page, you see the 3 use cases that McKinsey has researched. One was the capital markets, which we almost cover already with the current regulation, commercial transactions, letter of credits, e-invoicing, and so forth, and the extension to commercial credit. These were the use cases. McKinsey stated in the paper that there are so many other use cases which would bring additional savings, but they wanted to focus on those areas where they had the most competence and expertise. And I think it is already a very good sign for all of us, so that we can see now the advantage of the system. Of course, some have more than others, depending on the region of the world. And that leads us to my next slide, which will give you a little bit of an outlook of where we want to go and where we come from. So, of course, the LEI system was created after the Lehman crisis. The derivative space was, at the forefront. We see now the US, Europe, Singapore, Hong Kong is going to issue rules. Others, we pretty much believe this is secured. So something like, back then 10 years ago, when nobody knew who the counterparties were in the derivative space, cannot happen anymore, which is a good thing. The next one is to use this example with given by derivatives on the entirety of the capital and money market. So we have predominantly driven at the moment in Europe through the Prospectus Directive, MiFID, MiFIR, Solvency II, and others, a potential of 1.5 million LEIs. That's what we see. We would love to see a tick up like this in the US. That is in discussion, but not materialized yet. But this could make the whole capital and money market pretty well covered in a rather short period of time. And that would mean maybe a little bit more than 2 million LEIs in total. But above and beyond that, banks have, of course, other services, a lot of other services, and it was the CPMI IOSCO who suggested the LEI for correspondent banking. That would be the first time that the LEI would play a role in the payments side. In Europe, the Accreditation reporting requirement from the ECB uses the LEI as a reporting vehicle. The USA Mortgage Act was introduced last year and uses the LEI. So you see already that on the banking side, the regulators have started to engage in areas outside the capital and money markets. If you add trade finance, and we're going to run a pilot project this year in Asia on trade finance. If you add trade finance, we believe the potential for eligible entities around the world would be 30 to 40 million. So that gives you a little bit an idea of where we are today and where we want to go in the next few years. Don't ask me by when we will have this. This is, of course, not something we can answer today, but at least it's a vision that we wanted to share with you. And if you take the other two, which are at the drawing board at the moment, we're thinking about supply chain management. It's the same thing, the real world production, manufacturing, logistical chains, they have exactly the same issues and the same diversity in identifiers than we've found in the financial space. So we're working with this industry as well to see whether there's potential for using the LEI. That could become not just a vehicle of KYC, but also KYS, know your supplier, is a very important feature, and that would qualify for another maybe 10 million LEIs. Last but not least, the world is going digital, so we're working very hard to embed the LEI in digital identities, and that could be used throughout financial transactions or any kind of transactions on the web. And this is something we're very excited about and what we're working on with a significant amount of time. Coming back to KYC on the next page, that's from our point of view. If you go to the next page, please.
I'm getting a little lag. I'm trying to move it, Stefan. Sorry.
Okay, if I'm too fast, fine.
Yeah.
Of course, KYC is some kind of the holy grail of everything. The reason is very simply, everyone that does a business around the world has to have a bank account. That means the banks know all the entities around the world in one way or the other, and KYC is a big reporting and requirement in general for the banks. So the idea, of course, is if we could make the LEI a tool that could be used and adopted in KYC everybody would win from that. You could bring cost down tremendously. You can speed up your processes. The onboarding would be easier, and so on and so forth. So KYC seems to be a topic interesting enough for the private sector as well as the public sector to consider the LEI in order to get to those savings that McKinsey predicted. And we see a good chance there in this area. We have more and more firms, also big consulting firms who think about that, how they can help their clients in that process. We see utilities emerging that would like to use the LEIs, blockchain solutions emerging that use the LEI already. So we think this is a very interesting path for us, and we're working very hard to make this a success story. And on the next page, you see the OFR already predicted that. I think in 2012 already, the OFR in one of their statements already mentioned this. So 6 years later, it's now at the drawing board, and we're trying to work together with you, the industry, and the regulators on making this as well a success for everyone. How is this linked to our overall strategy? You will see on the next page, number 19. Our strategy was basically lined up in 3 pillars. We had in pillar 1, full coverage of capital and money markets globally. This is predominantly driven by the regulators. You have seen MiFID, MiFIR, and other regulations. So this is well underway. Then pillar number 2, use the stories around success and how to do this, and run similar projects in adjacent markets. This could be another growth option. We talked about supply chain, we talked about digital, and these kinds of things. But the KYC piece, that is the 3rd pillar, we're thinking about a GLICE 2.0, a GLICE where banks trust each other and use the information in the LEI for KYC. So that's our vision. It's not ready yet, of course, but that's our vision. And I think we share this vision with very many of you. So I'm very excited also to reaching out to the market and working together with the various stakeholder groups on this topic. And with this, I would like to end my overview on the current status of the GLICE and the strategic outlook. I'm very happy to take questions.
So thanks, Stefan. You got a lot of questions coming in that Will and I are trying to respond to as well. But first, I would share that you had a few people. Thank you for the BIC to LEI mapping. So pass that along to you. It looks like people are utilizing that and appreciate it, and look forward to seeing the potential of the ISIN mapping. A few people asked, so I thought we'd hear from you, when you talked about the level 2 data, and you show a pretty significant drop in Q4 on a positive side of legal entities reported direct parents who do not have LEIs. That dropped in Q4. I think I know the answer to that, but since a few people raised it, we figured we'd bring it to you to address.
Can you go on the slide with the statistics?
Sure.
I think it was in the beginning of my presentation.
Slide
here.
5. I believe it's on slide 5.
One further below before.
There you go. So that drop right there from 38% to 13%. Few people actually comment on what drove that. I'd assume a lot of that was MiFID.
That was within the Q4 reporting. So when we look today into the numbers are significantly higher. We publish on our website a quarterly business report. So for those who are interested in the development of those numbers, we have on our website a several pages long report that we publish every quarter on the development of the numbers. And that will help you to see where we are also at the moment. I think the latest report is either out already or coming very shortly. And then you see the full Q1 effect as well.
Yeah.
So before we get to kind of more policy strategic stuff, I think there was a question, you went over timelines, just the enhancement timelines. Is there kind of quick thought from you on when you think these enhancements will be implemented from the GLIFE's perspective?
You were talking about the technical stuff, the IT projects that I mentioned. That's all for 2018.
All 2018. Okay. And then,
yeah, and I think we'll do one last question for Stefan and wrap up. But when you talked about the McKinsey and Company update and the suggestion that the cost savings in the U.S. could be $650 million annually, I mean, what are your thoughts or comments on what the industry can do more to get more adoption, especially in the U.S.? I mean, Julia shared some slides earlier on how in the EU it's had a little more adoption. I mean, what can either the industry do or anything that you're doing from the GLIFE perspective to try to encourage that?
Oh, thank you for that question. Very happy to give you my 10 cents here. So first of all, I think right from the beginning, I would like to give the regulators really credit who developed that system and who stand firm and tall with the system and did not let go of things. You saw the LEI no trade rule. I just read an article this week where somebody said in the future it will be no LEI no hope rule. So let's see how this develops. No, that was really great. I think it's now time also for the private sector to think more strategically about the LEI. The LEI is not any longer just a reporting burden. It is a tool that is widely in use in many of the firms already for all kinds of business processes. I know of firms where front office guys cannot send each other emails about a client anymore without embedding the LEI to avoid ambiguous information and wrong information. So more and more firms, if not all of the larger firms we have been in touch with, they all agree that it would be perfect to have the LEI for all of their customers. But nobody wants to be the first. So the fear is if a bank A, for instance, would demand an LEI from each customer, and I'm not talking about the costs are insignificant in that regard. So just by asking the LEI from the client, they feel like the client could walk away because it doesn't like it, or he could take the LEI and onboard with another bank. So that is a little bit the chicken and egg situation where we want to work together with the industry. Maybe together we can overcome this and really make the LEI a tool that will benefit everyone and that you can really realize those potential savings.
Great. So unfortunately, we're just slightly over time. I don't know if there's any closing. I have a number of questions that are very specific, and those questions we're going to accumulate into an FAQ document and publish that in the coming weeks. There will be the recording and the slide deck, a slightly redacted version of the slide deck available just shortly. So I think with that, Jim, unless you have any closing remarks, a big thank you to Stefan and Julia and Alan. Really great webinar. Look forward to talking about the questions and socializing them among the participants. Thanks again.
Yep. Thanks, everybody.
Thanks, Stefan and Alan.
Thank you.